What's going on, everyone? My name's Justin and I'm with the Real Keeper Home Team here with eXp Realty. On our channel, we talk everything Jacksonville real estate. Well, in today's video, we're going to be going over the market update for the Jacksonville beaches and the Jacksonville Southside area as it pertains to March of 2023. Now, we've seen a lot of changes over the last couple months in the market, but what you're actually going to want to stay and watch the video for is to see what's changed with supply, what's changed with demand, and how that's taken into account with days on market and even what homes are selling for in relation to what homes are being listed for. So stay tuned, because when I get back, you're going to want to hear what I have to say. All right, welcome back. So before we start, don't forget to like and subscribe to our channel, as well as hit the bell in this video so you get notified when we post more content like this in the future. All right, so starting off, you're gonna actually see here on the data below, we actually had 248 homes go under contract in March, whereas we had 410 homes overall for sale. This left us with a 37.7% listed pending ratio. This ratio has skyrocketed from the last couple months, and to be honest, this is not necessarily because of buyer demand increasing exponentially. Yes, buyers have started to hit the market a little bit more, but what we've actually seen is there's just also less sellers hitting the market, which has started to create a little bit more of a push for buyers going under contract and therefore less inventory being available. Again, as we've actually seen with most months, the current inventory is still being described as mildly active. And what we are seeing is that the homes in the $400,000 to $600,000 price range are the ones relatively getting the highest number of contracts. Also, the most homes that were actually for sale were actually also in that same price point, $400,000 to $600,000, and the median list price of those homes collectively that were available was $572,000. So we've actually seen a bit of an uptick on price, whereas we are still seeing about the same amount of homes, $400,000 to $600,000, being the highest amount of homes in the market in these areas. Now, this graph here, you're going to actually see that the number of homes for sale and the number of homes that have contracts pending are starting to kind of come closer. This typically is an indicator of, again, supply chain issues, in the sense of there are less homes available, and so therefore the buyers that are out there are making a move quickly on the ones that they like, but also sometimes look at the ones that may need a little bit of work but are still worth going after. And then we also can see here we had a total of 988 contracts that closed in the last 6 months, with the median sale price of $438,000. Now, what this actually shows in relation to some of the previous videos I've done is we actually are seeing more homes starting to sell. We're just starting to get that amount closer to that 1,000 where we were at closer to June, July of last year. We also noticed that the homes in the $200,000 to $400,000 price point had the highest number of sales. Very common again for this area because of the fact that it's a very desirable area, and so homes in that price point tend to not last very long. Now, this chart here, when we look at it, it shows you days on market in relation to homes that are for sale, as well as homes that have just sold. So what you're actually going to see is most homes, really up to about $1.2 million, are going to have relatively either more days on market for homes that are for sale in relation to the ones that have sold, or it's going to be about the same. As we get higher in the price points, you will start to see that the homes that sold actually had higher days on market, which does just show that the ones that are for sale haven't been on the market long enough to supersede those. And also, for homes that are typically higher in price point, multi-million, those do take a little bit longer to sell. So it's not abnormal to see the sold days on market be as high as they are. Now, we did see here that for active listings, the median days on market was actually 38 days on market. That's actually a little bit more still than homes that actually sold in the last 6 months, which was around 36 days on the market. We also saw that the homes that did sell quickest were homes in that $0 to $200,000 price point, and I wouldn't be surprised if, like I said, the homes with $200,000 to $400,000 also were right behind, not too far behind them. So as we keep moving along, you're going to see here But the median list to sales ratio for this area is still 97.7%. So even though inventory has decreased and buyer demand has probably increased slightly but still stayed relatively the same, and supply overall of homes has decreased, we are not seeing a huge uptick in what buyers have to do to get their home under contract and sold. To give a little bit of a reference points, in June of last year, we were over 100% list to sale ratio. What this meant is if you were looking to buy a house, and let's say the house is $400,000, you were having off the bat having to pay above that price, whether if it was with an increase on the offer price, whether it was paying the seller's closing costs, whether if it was doing some sort of appraisal gaps, but you had to do something above what the seller was asking to get under contract. The last couple months, we have come down that 98% threshold. And so what this shows here is it shows that we are still relatively in that same kind of mindset that, between buyers and sellers, that although sellers will get a good number, buyers still have the ability to negotiate and get some deals out of these houses that they're interested in. And again, deals aren't necessarily huge price decreases, but 3% does go a long way, and it does help pay for closing costs or rate buy downs, if that's the route that you as a buyer may choose to go with. Another indicator I like to go over is the absorption rate. The absorption rate last month was right around 3 months supply of homes. In essence, no new homes at the market. We're going to be out of homes in 3 months. In March, we actually saw that number start to decline a little bit, and we went from right around 2.9 to 3 down to 2.5 months of inventory. Nothing to be too alarmed about if you're a buyer. If you're a seller, that's always a positive for these areas, because it just means that if you have a home you're looking and think about selling, most likely there's going to be a good demand of people looking for that home. But it is something to kind of keep in mind, because if that number continually starts to come down, which we will see in future months if that is the case or not, it could start to create the list to sale ratio to come back up a little bit, especially if we see some declines in rates to any degree, which we are already starting to see a little bit. So again, if rates decline, there's a good chance as a buyer, there's going to be more competition because more people are going to start to potentially re-enter the market. Next, we're going to look at these two graphs. These two graphs show us median sold price and median days on market as it relates to the last 6 months. So what you're going to see here is March had a huge uptick, whereas February we did see a decline. So with March, we actually saw the median sold price get back up to January levels, which was closer to that $480,000 median sold price. Potentially in April and May, that number could start to kind of increase a little bit more. So don't disregard the April point on there, because that is unknown at this time, as we're only a couple weeks into the month. But most likely we are going to see that April data point be somewhere in line with the March data point, maybe a little bit higher, maybe a little bit lower, but relatively staying about the same. We don't foresee it to come down to February's levels, because we are starting to hit that summertime, which tends to be the busier time of the year. Now, as far as days on market, you're going to see here that in March, we actually saw days on market increase again for homes that have sold. So it's kind of an interesting market right now. You have days on market increasing, you have supply decreasing, and typically when those two factors go hand in hand, normally if days on market's going up, supply is going up. If supply is going down, days on market's going down. So the fact that those things are kind of bucking each other is something that we're going to definitely want to monitor in future months, because at some point one of those two is going to have to give. Lastly, this graph down here, the biggest thing I like to always go over with this graph is that I like to always go over estimated months of inventory, or the absorption rate, as it pertains to certain price brackets. So as you're going to see here, we have quite a few reds, really up to $1 million in these areas. So in essence, if you're looking to buy a home in these areas for less than $1 million, there's less than 3 months of inventory for those price points in these areas. How does this relate to previous months? Previous months, these were actually more, a couple of them were actually more orange. So we were actually looking at having 3 to 6 months of inventory. So the fact that these areas and these price points are starting to come down on inventory is definitely an indicator that the market's heating back up. that buyers are still out there, that maybe there's less sellers, and that competition may be a little bit tougher in the summer than it was in previous months, especially if we see any sort of rate correction. So definitely, if you're thinking about buying a house, it's imperative that if you're wanting to buy a house this year, you may want to reconsider. If you're thinking about waiting, you may want to reconsider waiting, because a lot of people are in that mindset. And if rates start to come down some, and we hit that summertime high of the hustle and bustle, people buying and selling because of the school year's ending and trying to get into different school districts and moving from cities and states to other cities and states, it could get a little bit busier. So definitely, if you have any questions on anything I went over in this video, or if there's anything you feel like you want to hear more about that maybe I didn't go over, definitely leave a comment below at the bottom of this video in the comment section. I'd love to hear your thoughts. And if you just want to hop on my calendar or reach out to me directly, my contact information will be down below. Love to go over anything I can help you with your home search here in Jacksonville, as it pertains to Duval County, St. Johns County, Clay County, and Nassau County. And I want to be of help to you. So definitely don't hesitate to reach out. That is definitely something that I love to be able to do, is to help figure out what you may be looking for, your wants and your needs. So as I said, contact information down below. And other than that, I will see you guys in the next one.